Today we're talking about... Hey everyone, welcome back to the channel. My name is Deanna. This is Market Stalkers. Today we're talking about the difference between scalping and day trading. Contrary to popular belief, these two are not the same. I'm also going to talk about some of the reasons why you shouldn't really scalp. I actually call scalping grasshoppering, hence the t-shirt jokes. Grasshoppering means to hop in and out of trades like a wild man or wild woman with no plan, no idea of which direction you want to take, intraday sentiment, none of that, right? You should especially be wary of scalping or grasshoppering if you're a novice trader who hasn't yet mastered finding intraday trades that will last you for about 1 to 3 hours. Let's get to business. First off, what is scalping? Scalping, in traditional terms, basically means you're taking about 2 to 4 ticks out of the market each time you do a trade. And right away, let me just say this. If you're trying to scalp on a regular MetaTrader 4 spot market broker that has any kind of a spread on the price, scalping is going to be impossible as a risk model in any shape or form. It's going to give you negative risk reward, and that's just a killer for any account. Because once you enter the market, the broker will add the spread on top of the price. So even if the trade goes 2 to 4 pips in your direction, because of the spread, the trade probably won't even be in profit. On some major Forex pairs, that's not such a big deal because the spread is quite small. But you know, Forex is really quite dead these days because of the low interest rates globally. Carry trades, you know, used to be a thing. Now they've completely disappeared as a viable strategy. And if you're trading CFDs, then it's even worse, to be honest. Like crude oil CFDs usually has about 3 to 4 ticks spread. So, you know, let's do the math. If you're using a 4 tick stop and you have a 4 tick spread, but you're still aiming for like an 8 tick profit, because we still want positive risk reward, right? So 2R multiples, the same thing as 2 to 1 risk reward ratio. That means that your trade will actually need a movement of 8 ticks before your break even to cover the spread and your stop loss. So really, to get a net 2 to 1, you actually need to use a 16 tick profit. You really need to use a 16 tick profit on a 4 tick stop loss. Now, if you're trading futures, then there are some ways that you can make it work. But keep in mind, with any kind of scalping, discipline is a huge issue. You have no room for any slips of discipline. And, you know, a lot of people are not good at self-disciplining themselves anyways. So if one trade doesn't work out and you're risking 1% of the account, you cannot do just another scalp and another and another and another and just hope that you're going to cover the losses. Because if you start to lose the plot like that, before you know it, you'll be down like 5, 10, 20% of your account in one day. Just one day. And pretty soon, your entire trading career will be gone quicker than Kate Moss's singing career. I can hear some people going, Kate Moss sings? Really? Scalpers usually end up chasing price at some point in their existence, especially if you happen to hesitate to pull the trigger, or maybe you got distracted or afraid or whatever. So then the rest of your day is just spent trembling away with every tick. And then that day turns into one big frustration. You might have gotten stopped out, or you didn't get a good fill, or, you know, any multitude of reasons why scalping is not going to work. And the more frustrated you are, and the more annoyed you are, the more you'll find that your self-limiting beliefs are going to come out to make their mark on your P&L. Revenge trading. Kicking off trade after trade without any thought or plan. Causing yourself so much traumatic stress that you start being afraid to even press that button when the real opportunity does come. Now, I mentioned the spread being a problem with trading spot and CFDs, but that you can somehow make it work if you're trading futures. It's true, there's no spread on futures contracts, but there are other issues. Because you still have commissions, the round trip costs. So if you do more than about 4 to 5 trades per day, and you manage to make some profit, you'll also find that most of your profits will be eaten by commissions. Because by default, scalpers tend to trade very large positions. So you do all of that work, and you look at your statement, and you realize there's very little profit left. And, you know, to me, if you're worried about the commissions, something must be off with your trading. It shouldn't be like that. Most of my traders don't even notice any commissions because, we catch anywhere from about 30 to 120 ticks in any single day. And we trade, relatively small contracts compared to the size of the available trading capital. Scalpers or grasshoppers, you will never really get a chance to get a nice big bumper trade where you don't do much, but you get a big profit. Those kind of trades are usually caused by an outlier event. And as a day trader, you would recognize the opportunity and you would see that there's a sustained auction, and then you can decide to let it run for a bigger risk-reward ratio on that day. But scalpers usually get, so knackered by then, and you'll be frustrated and tired and bloodshot eyes just from staring at the screen for 12 hours a day, every day. I mean, why would you want to live like that? And that is definitely not how I teach people to trade, because you will not survive like that for many years in this industry. I'm in my 40s now, but if I traded like that for the last 14 years, I'd look like I'm 80 years old. So we need to find some zen. If you're enjoying the video, give it a like, please. Please give it a like. And make sure you subscribe to the channel for videos on various trader issues, because chances are, after 14 years of me being on this journey, from investing to swing trading to finally being a day trading professional, at some point I promise you I've battled every single problem that you might be experiencing, and I managed to find a solution for it. So I may know a few things here and there. Anyways, back to scalping versus day trading. Market stalkers are not scalpers. We are day traders. What's the difference? Well, day trading is a style of trading that I suppose some people would still classify as scalping because we close out the trades at the end of the trading session. But the difference is in the amount of trades we do and the duration. As a day trader, you're going to be working with a very solid risk model that relies on you doing only about 2 to 4 trades per day, depending on what kind of a day it is, obviously. Maybe you might do more if the day is particularly lively and some of the trades end up break even or in small loss or small profit. That's not to say that sometimes the more experienced day traders won't ever do a real scalp. While we're waiting for the planned out opportunity, there may be some scope for a scalp, but my scalps are not 2 to 4 ticks. They're usually 15 to 30 ticks. And also, why take 2 to 4 ticks when you can learn to take so much more, right? And in the process, you stop yourself from having a heart attack by the time you're 39. Day traders work off a much calmer time frame. We work off 15 and 30 minutes charts. And yes, we still sometimes look at 2 and 5 minute charts, but that's only in cases where we need to work on minimizing the stop loss to a degree. And you also definitely don't need to stare at the screen for 16 hours a day. Instead, you want to see a particular price behavior at a particular level at a particular time of day. Like, the most amount of time you should spend staring at the screen like that is about 4 hours or less. As a day trader, you will also be able to recognize when the market has those legs to go further. Reading sentiment, real-time developments on the TPO profile, it will all provide you with a reasonably clear picture of whether you're right or wrong, but also it provides you with the opportunity to correct your position in light of the incoming information, rather than holding on to some, bias that you had before the markets really started moving. And that's the kind of trading that I teach my market stalkers. Not to be grasshoppers. We want to be grasshoppers anonymous, reformed grasshoppers. We want to trade systematically with firm logic and firm rules, which in turn will make it so much more easier to become consistently profitable and to remain consistently profitable. But by the same token, it will also allow you to have some room to make some mistakes and to have a bit of an off day sometimes, because we're all human. And by having a bit of a buffer, having lots of good days, then you can afford to fuck it up. Because it's not every day that you get massive opportunities to make, 3 to 4 trades that will all go to your designated targets. That's not the reality of day trading at all. Once you start doing this job the right way, not clicking the buttons like a mad person, this is the only line of work where you can have large windfalls. And as long as you keep it relatively sensible on the days when you're not reading the market that well, using the right risk model that is statistically viable, then you can have a very nice side income to begin with. and maybe something more serious down the line. It will be a while before you can make enough to, buy all the pretty shiny things. But even when you reach that point of making quite a lot of money, I still prefer to have multiple sources of income. Otherwise, you'll put unnecessary pressure on yourself by putting all of your eggs in one basket. So rather than, flipping off your boss and imagining you'll be living out of day trading in 6 months, keep your job and trade for a prop firm as a side job. There's loads of remote prop firms now. TopStep, one of them. You can find links down below if you want to try out their combines. But the point being is, you should have at least 2 or 3 sources of income. It's always so much easier to build wealth and abundance from multiple sources. The reason why I say this is because there's always a mental adjustment, even when you are consistently profitable. When you start trading larger positions, you will freak out. You will make mistakes. Until you get to a point where you really don't care whether you're trading 1 contract or 100 contracts, you'll still get a point where you will start to care about the loss. You get to a point and you're thinking, ouch. When you're working for a prop trading company, 1 month you're given a daily loss limit of $300. And then you have a run of about good 2 or 3 months, and then they loosen the max position sizes and the daily loss limits. So suddenly you can have 3,000 or 4,000 daily loss limit, and you can trade 10 to 12 contracts per trade. Another few months down the line and you're trading, with a daily loss limit of 15,000 a day. You find yourself bailing out of positions at like 0.5 R because you're thinking, oh my God, it's 7,000. I better take it. I could buy so many things for 7,000. But then you start doing that and you start screwing up the risk model. And that's when I see people losing it. So I prefer to talk in ticks and percentages and not really focus on monetary values too much, because you will lose your head very quickly. If you're looking to bump up your day trading skills, then check out the link below the video that has my report on some of the more technical reasons why you shouldn't be scalping, but also how to start your journey to becoming a real day trader, capable of passing any reasonable prop firm challenge like TopStep Combine, for example. Now feel free to leave a comment down below. What was your experience with scalping? Are you still a grasshopper? And would you like someone to talk you off the ledge? That's all I've got for you today. Check out some of my other videos on trader issues and debunking some myths on what it's really like to be a professional trader. Full disclaimer, there are no Lambos and no private jets in there, and the only blonde chick you'll find in them is me. And I'll see you guys next time.